have a very special guest to bring you. Steve Cohen is here. He, of course, is the chairman and CEO and president of Point72, a longtime veteran of Wall Street and hedge fund manager, and beginning his fourth season now as the owner and chairman and CEO of the New York Mets. And it is great to have you on the program for the very first time. For the very first time.
Hey, you got to try everything once, right?
Got to try everything once. Well, we'll see whether we get to do it more than once. I do want to talk about investing and where you are. I know you can't talk about individual names, but put it in baseball terms, given that's your other business now. What inning are we in? Are we in some kind of bubble in terms of where the equity markets are?
I don't see it as a bubble. I mean, I think the markets are discounting some of what they think AI is going to do for companies.
You think it's discounting?
Discounting.
So you think that there's even more upside as a result of AI?
My view is this is a really durable theme. I'll give you one little anecdote. My CTO comes to me and says I can save the firm $25 million by using these LLMs to improve our efficiency. Now, we're a nice-sized firm. We're not a huge firm. So imagine what big companies can do, and that's just one thing, okay? So it gives you, a little bit of a look into what's possible. And
so, people, there's a view. Is this, is the AI boom, what does that mean for chips? What does that mean? So when you look at that, who do you think the winners and losers are?
Well, listen, I'm not going to talk about individual stocks, okay? But there's going to be big winners and big losers, okay? Because this is transformational, and so you got to do the work and figure out what companies are going to benefit, and frankly, there's going to be companies that you haven't even heard of. There'll be new companies. I mean, when you have technological change like this, it sort of reminds me of the '90s, where the best new companies came out of that period.
But does that mean we're in 1996? Does that mean we're in 1999?
We're not in 99, okay? I mean, I don't think so. And so because I think it's a durable theme, I think, now, it doesn't mean it goes up in a straight line, right? I mean, it may take a while for this AI theme, actually to really take hold within companies, and they're trying to figure out how to use it.
Right.
And so, this is so, it has the potential to change how my firm operates. If you're a company and you're not thinking about this,
right?
You're going to wake up one day and go, we're in trouble.
We have Raphael Bostock from the Fed on in just a little bit.
Yeah.
What do you think about where the Fed is today?
Yeah.
Are you expecting cuts to come this year at all anymore? I mean, how do you think about what the Fed's doing and how much that's propelling the market one way or the other?
Yeah, I think the market expects 3 cuts. I think that's the number. I don't disagree with that. I think inflation's been, somewhat contained, and I think, ultimately, what it'll come down to is that a true statement or not. We think the Fed thinks they, eventually is going to come down to 2% inflation rate.
What do you think?
I think that's going to be hard. Okay?
So what is that, 3% for you?
I don't, I don't get in the weeds quite like that. Is it 2.5? I mean, those are Fed watchers.
Right.
I think it comes down to, there's still a lot of underemployment in the country. And so it really comes down to if growth is too fast, then, you start getting constraints on labor and wages go up, and that may be a problem for it. But it's hard to, we're in one of these periods where I don't think many people know exactly what's going to happen.
You have a thesis, I'm told, that you actually shared with Yasser from PIF.
That's right.
About the work week. We always talk about sort of working from home, working from the office, that you think is actually behind part of your investment in golf and actually may be behind your investment in or thoughts about how the whole economy changes.
Yeah, I mean, I think I would have done the golf investment anyway, because I think there's a longer-term thought. But
what's the thought?
My belief is a 4-day work week is coming. Between the advent of AI, generally, we hear from people that Fridays are just not, people are not as productive on Fridays. And so I just think it's an eventuality. When it happens, hard to know. But that should fit into a theme of more leisure for people, which means golf rounds will go up.
So people are going to play more golf on Fridays.
And interest will go up. And so, I guess courses will be crowded on
Fridays. What are the other investment
Yeah.
ideas then around that idea?
Well, anything around, I would say leisure, travel, right? Experiences, all that type of stuff, right? I mean, that makes, if people have more time, they're going to.
And but you don't anticipate letting your traders and PMs not work?
Well, if the market's
frankly, on Saturday they're working.
You know something? If they're taking off Friday and they have a portfolio, that's a problem. Okay, if the markets are open. So forgetting us. Okay, I mean the vast majority of people will get an opportunity, I think, at some point to have a 3-day weekend.
I'd asked you earlier how it feels to sort of shift into this more public role, but I am curious how it feels to be. You are now a beloved person in New York.
Maybe. Okay, we haven't won.
We'll see if you win.
Okay, we'll see how long that lasts.
But that's been a real shift from over the last 10 years and all of the headlines, 10 years ago. And I'm just so curious how you, on a very personal level, have felt about whatever that journey has felt like.
Well, I'm the same guy. Okay, I haven't changed. Okay, it's just so. I just think it's so interesting how 10 years ago, obviously tons of articles that were highly negative of me and my firm, and then the New York Times writes an article, like a glowing article. I'm the same guy. Okay, and just shows you that the world keeps turning, and just enjoy your life, and it's just amazing what can happen.
We keep talking on the broadcast about whether we're in this sort of risk-on, risk-off situation. We look at the Magnificent Seven. We look at the NASDAQ. On the flip side, we keep looking at Bitcoin. I don't know, do you own any Bitcoin?
I own very little. I own a little bit.
But you own a little bit?
Yeah, like really little.
For what reason?
No, the only reason my son is really into it, and so he had me play around and try to figure out how to transact on Coinbase. So I bought a little bit.
And then in terms of how you think about, we were talking earlier about the election. Do you think the election's going to have a huge impact on the markets at this point?
I think a little bit. Obviously, if Trump comes in, you can imagine, perhaps tariffs. That's certainly possible.
Right.
He's probably going to be perceived good for growth. But growth has been fine already. And if he comes in and it's good for growth in a constrained labor environment, that may stoke some inflation fears. It's possible. But I don't see that big a difference either way.
Is that inside the firm? Is there a house view about how the election pans out?
Well, we think today we probably say Trump has an edge, but it's so early that it could change. These things are volatile.
These things are very volatile. Steve, we want to thank you for being here. It's been great to have this conversation. We hope to do this again.
I'm available next week.
You're available next week. We'll hopefully see you next week. Steve Cohen, thank you so much for joining us.
Thanks, Andrew.
Good luck with the season, and